Well, we have some critical news here from MicroStrategy all about BTC or Bitcoin yield. I'm going to hold up a matrix that I created based on what I just heard from MicroStrategy leadership. Now, it might be possible for you to pause the video. It might not. If it is possible, then you'll want to zero in on this. It's very interesting. We're going to talk about this BTC yield. Now, if you're not able to see what I just showed, it's a 2x2 matrix, very simple. And the labels on this matrix are shares outstanding, and then that's the y-axis, and then the x-axis is BTC price change. Okay, so it's really about the Bitcoin holdings in relationship to the number of shares outstanding. And if you think about this, people who are buying MicroStrategy are often buying simply because they want an indirect way to hold Bitcoin. And there's also leverage at play here. And there is also intelligent leverage, meaning you're going to sell equity or sell shares to acquire more Bitcoin, issue more shares, and then use the proceeds to buy Bitcoin. Or you might be doing something like issuing bonds, convertible or otherwise. So in other words, issuing debt, not equity, but issuing debt, and then using the proceeds again, not for regular operations, but no, to acquire Bitcoin. And this came to light, all of this came to light in MicroStrategy's recent earnings report. So this is a big deal. This is all about BTC or Bitcoin yield. Let me read an excerpt, and then I have to read some more things as well. There's really a lot to unpack here, so stick with me. My name is John S. Rhodes of the Rhodes Brothers. My brother Matt Rhodes and I share a lot of information for a lot of people to make more money online, also with their investments, and you can find more about that in the description below. But this is what President and CEO Phong Le highlighted in the recent earnings report and the transcript, the call that was provided to investors. And there's a real focus here by MicroStrategy on this BTC yield, and it goes like this. So they introduced this concept of BTC yield as a KPI, key performance indicator. The metric measures the percentage change in the ratio of the company's Bitcoin holdings, that is the number of Bitcoin, to its assumed diluted shares outstanding. So one of the key things here is, although many people think about the price of Bitcoin, those who are a little bit further on the learning curve are not thinking in terms of dollars or dollar value. Instead, they are thinking about literally the number of Bitcoin or the amount of Bitcoin being held, not in dollars, but denominated in Bitcoin itself. So one Bitcoin equals one Bitcoin, not Bitcoin, one Bitcoin equals 50,000 or 100,000 or a million. Instead, it's Bitcoin to Bitcoin. So when we think about this, it's how many Bitcoin does MicroStrategy own, and then how many shares outstanding, and that gives us that BTC yield. Okay, so again, measuring the company's Bitcoin holdings to its assumed diluted shares outstanding, and then year to date, this is 2024, we're about halfway through, MicroStrategy achieved a BTC yield of 12.2%, targeting an annual yield of 4 to 8% from 2025 to 2027. So it's very interesting that 12.2% increase can mean a number of things. It can mean fewer shares outstanding. It can mean the number of Bitcoin held has gone up, or a mix of those two, which is really the whole point of the BTC yield impact matrix that I developed right here again. And it's not essential that you're able to see that matrix. It's really for the understanding of what is driving up the yield, or what could be harmful or drive down the yield. All right, so that's the key. We're trying to figure out what this BTC yield really is and what the implications are. So this again is from the investor's transcript. In other words, you can listen in to the CEO, Fong Li, and you can listen and you can read the transcript. So I've done that for you. I've done the work for you. So what they're saying is there's an opportunistic use of leverage and excess cash to acquire Bitcoin, which I think many people know, as well as our strategic execution of our capital markets financing. So what they're really saying is we're going to use debt financing and equity financing, or issuing more shares, and then we're trying to increase the incremental value created for shareholders by way of acquiring more and more Bitcoin. So the more Bitcoin that you can acquire, and assuming it does go up in fiat dollar price, the better off shareholders are going to be. But literally getting more Bitcoin is the true objective. Okay, it's right here for you. Our objective is to accumulate Bitcoin holdings at a faster rate than we issue shares. So they want to acquire more Bitcoin faster than the number of shares that are being issued. They might even buy back shares in the future, although they're not doing that at this point. Continuing on, and we believe we have a demonstrated track record of doing so. I believe that's also true. To assess our performance in achieving this strategic objective, we're introducing a new key performance indicator, that's the KPI, which we refer to as BTC yield. We define, so zero in here. If you're lost right now, please don't be. Listen into the definition from Fong Li, the CEO. Okay, we define BTC yield as the period-to-period percentage change in the ratio of our total Bitcoin holdings to our assumed diluted shares outstanding. So you've heard this a few times now in this video. You can see the matrix that I've held up a couple of times, and you should have a conceptual idea that if you can acquire more Bitcoin over time and your shares either go down or stay the same, it's very obvious that the amount of Bitcoin held per share is going to go up. So that's very, very cool. It's probably the easiest way to think about this. If the shares remain the same, but each share holds more Bitcoin, that's going to drive up yield, or if the shares go down. Okay, I'm going to continue because this is so important. We use this KPI to help assess the achievement of our strategic objective and for evaluating capital allocation decisions. So capital allocation decisions basically comes down to those two things that I've mentioned a couple times to make it really clear for you. You can either issue new shares, or you can issue debt, or you can sell debt and then take the cash, the fiat cash coming in, and you can buy more Bitcoin. Okay, this is critical here. If we increase our total Bitcoin holding over a given period at a faster pace than we increased our assumed diluted shares outstanding, we achieve a positive Bitcoin yield. Again, you want more Bitcoin coming in, not dollars. You want more Bitcoin per share. More Bitcoin per share means you have a high yield or a positive yield. Okay, I should note here that Bitcoin yield is not equivalent to yield in the traditional financial context. I couldn't agree more with this. It's very, very important. It's simply just a measure of the percentage change. Got it? It's a measurement of period to period change. Okay, period to period. And the ratio of our Bitcoin holdings to our assumed diluted shares outstanding. So it's not yield as in dollars, or even yield as in Bitcoin that is being thrown off like a dividend or interest payments. It's a ratio. It does give you a sense of each share holding less or more Bitcoin over time. They probably could have used a different term or a different idea or different wording than BTC yield. And I think that's a key a key point of this video right here that you're experiencing is that BTC yield is not a yield or cash or Bitcoin being thrown off by MicroStrategy itself. Instead, it's really about the shares, issuing more shares, the capital allocation, the cash that's coming into the company being allocated, the financing. So really, I suppose I had to stop and say this. So you could pretty easily increase the BTC yield by issuing shares, selling debt, or taking dollars, US dollars, finance, the cash that's coming into the company and buying more Bitcoin. So turning the cash flow, the cash coming into the company into Bitcoin. So all three of those things could easily help you increase the amount of Bitcoin that you hold. Obviously, if you issue shares, then hopefully you're able to get a whole bunch of Bitcoin for that at a higher rate. And obviously, if you are taking on debt, you're increasing your leverage. So there's nothing here that says like, hey, I mean, because you could issue a whole bunch of debt and then increase your BTC yield, but your debt goes up, the leverage goes up. So there's nothing here at all really about the risk that the company is taking on when it issues more shares, and especially when it's issuing more debt. So don't let this fool you into thinking that it's safe or free just because. Okay, that is not the case, and I think that's a critical point for you to noodle on here. Okay, I'm going to continue. I think that this is important. Okay, and I don't know, maybe they're going to be covering exactly what I'm talking about. In addition, when we use Bitcoin yield, we consider the various limitations of this metric, including that it assumes that all indebtedness will be refinanced, or in the case of our convertible notes, converted into shares of common stock at the respective conversion prices. Critically important. And it does not take into account debt and other liabilities. Again, this does not tell us anything about actual cash or dividends being created. No interest that's being created by Bitcoin itself. Nor does this tell us anything about any kind of variance or variability in Bitcoin price and any kind of assumed risk from price going up or down, if that's something that concerns you. And also, this doesn't really tell us anything about the actual debt that the company holds and the risk that higher debt can have for a company. So if you need to go back and watch that part of the video and hear that again, I encourage you to understand what is happening here. BTC yield doesn't tell us a whole lot about risk or variance, or in a lot of ways doesn't tell us much about cash at all. It's very, very particular. It's number of shares and amount of Bitcoin holdings. I still think it's very useful. I still think it's very, very useful, and you can track things over time, but it's not telling you what you think it might be telling you. Don't be fooled, right? Don't be fooled. Okay, another piece of this too. And it does not take into account debt and other liabilities. Like I said, although Bitcoin yield is not actually a yield in the traditional finance context, we internally, inside MicroStrategy, we internally think about this metric as some might think about a bond yield or a yield on another financial instrument. Well, I'm glad that they are doing that inside the company. I just don't want you to be fooled into thinking that MicroStrategy suddenly has some kind of interesting kind of Bitcoin yield where it's spitting off Bitcoin to you, or that they are getting actual Bitcoin as yield, nor are they getting cash out of the Bitcoin in terms of cash as in US dollars or anything. That's not what's going on. It's really just a ratio, again, between the Bitcoin holdings and the number of shares outstanding. I think it's essential that you focus in on that and deeply understand it, because it's easy when you hear a yield that higher is absolutely better in every sense for the company. Well, that might not be the case. You could issue a lot of debt, I mean a ton of debt, and buy a whole lot of Bitcoin. Your shares didn't change. The amount of cash coming into the company from operations may or may not have increased, but what you did is you've issued debt, so you can use the proceeds of selling the debt to buy more Bitcoin, and the shares didn't change. So you can drive up that yield artificially, yet the risk in the company might have skyrocketed because of how much debt that has been issued. Now, again, you might have to go back and watch this video or parts of this video, but this is profound. It can really be slippery for the individual investor. Okay, continuing on here. It's obviously an imperfect analogy, but we look to the metric to help us assess how we are doing on using our capital. This is MicroStrategy internally, on how we are using our capital most efficiently to increase our Bitcoin holdings over time. So I'm gonna wrap up with something here that should be pretty useful. I'm gonna walk through the matrix that I built, and it's imperfect in part because of the labels and the concepts I had in my head before really thinking this through. But okay, so we're gonna be thinking about the shares outstanding. Again, that's kind of like the y-axis, or it is the y-axis, and then the Bitcoin holdings, not the price change, but the actual the amount or number of Bitcoin being held. Okay, so we've got two quadrants of the four that we know are going to have a certain direction. So I'm going to go in the most positive direction first. Okay, if the amount of Bitcoin goes up and then the shares that are outstanding, the diluted shares outstanding, goes down, the yield will go up. Yield will increase. Yield will be high or higher. On the flip side of that, in another quadrant, we've got that if the number of Bitcoin, or the holdings, the Bitcoin holdings go down, and the number of shares goes up, the yield is going to decrease, right? So again, we just kind of know that if the holdings go down and the number of shares goes way up, I think I said that right, then we know that the yield is going to go down. Basically, if you have more shares but less Bitcoin, the yield's going to go down. Just if I wasn't clear about that. Thanks for working with me here on that. Okay, so, and then we have two unknowns without looking very closely at the data provided by MicroStrategy. Okay, first is that if the holdings go up, but the number of shares goes down, it might be a little tricky. And the other way around, if the Bitcoin holdings goes down, but the number of shares goes up, we don't quite know how that's going to work out. Again, all that really matters here is that, well, I shouldn't say all that matters. Let's back up on this and make it simple. We know that MicroStrategy can use various levers. They can issue debt, they can issue shares, and if they do that, they are going to be buying Bitcoin, and that could be good or bad. If the company is profitable and they take those profits and buy more Bitcoin and nothing happens with the shares at all, we know that the Bitcoin yield will go up. This is very obvious. What we don't know, and we also know this, we know that if the Bitcoin holdings go up, so Bitcoin holdings go up, but there are no new shares issued, or there are fewer shares, yield will go up. And we know the exact opposite of that as well. Again, these are the critical points. If the number of shares goes up and the Bitcoin holdings go down, yield will go down. Those are like the key concepts. And then we don't know in those other quadrants. we don't know in those other quadrants how things are going to turn out without looking specifically at the data. And we would need to wait for MicroStrategy to give us a clue about whether or not life has gotten better or worse for shareholders. So that is your introduction to really two different things. One is what MicroStrategy is doing in terms of the BTC yield, and then also how MicroStrategy exactly and precisely defines what BTC yield is. So you can use that as you wish. You can hold the company accountable as a shareholder. You can scrub and analyze and think about other companies and what they are doing with Bitcoin and their Bitcoin holdings and see what kind of yield are they generating. And again, not dividends, not interest, but what kind of BTC yield are other companies, what are they getting and how does that compare to MicroStrategy? So there you have it. Again, this is John S. Rhodes of the Rhodes Brothers, along with my brother Matt Rhodes. Thanks for watching, and look below for more information that might help you on your journey to make more money and utilize AI perhaps, and a few other things right there down below. Forward this to someone if you think that they would get value out of it. Really appreciate it. Like, share, and so on and so forth. Again, this is John S. Rhodes. Thank you for spending time with me. Really appreciate it. And you mean a lot to us. Thanks. Take care.